feels like it's one of those parts of the portfolio which is something that should be taken into that long-term account. And we talk about some of these short-term moves because they are relevant and they quite possibly present buying opportunities for investors, or if they move high, there can be ways where you can take profits out the market as well. But ultimately, my view is that it should be a sort of portion of a long-term portfolio. I mean, does this short-term stuff really make a difference to the longer-term thread that you think that this market's going to take? Or is this kind of like, is it going to be a sideways market for sort of like 18 months or so?
Look, no, I don't.
Welcome to the Exponential Investor Podcast. Want to be a better, smarter, more clued up investor? Well, you've come to the right place. We cover the breakthrough investment ideas you don't hear about in the mainstream to keep you on top of the megatrends and opportunities reshaping our world.
Good morning and welcome to your regular Friday Exponential Investor Podcast. I am your editor, Sam Volkering, here with my new co-editor, Shae Russell. Welcome again, Shae, to the Exponential Investor Podcast. It's great to have you with us this week. Now, I want to kick this off with talking about something that you are very familiar with, that I saw this week, and I've seen it sort of flooded about a bit on Twitter, which I'm on Twitter a lot. I like Twitter. It's a great way to complain about things. But I noticed this week that the gold price has taken a bit of a pounding. And to be fair, I was pretty surprised by that because, as we know, gold is a pretty solid hedge against things like inflation, turmoil, geopolitical events like war. And so we'd seen the price of gold actually start to creep higher to, I think, around $2,000 even above, possibly. I don't know. You can correct me on that. But then it's really sort of come off quite substantially from there, and I don't really know why. And I know you're an expert in this field, and I want to pick your brain about it. And I'm sure people watching us today want to know what's going on because they're quite likely they've got exposure to gold either directly, physically, maybe through an ETF or some miners or a whole bunch of different ways you could play this market. But can you give us a bit of an idea of what you think is happening with gold at the moment?
Yeah, look, so gold's performance of the last couple of weeks isn't particularly surprising if you look at a couple of things. First of all, the Federal Reserve raising rates, that's taken the heat out of gold. Now, it's not to say gold can't rise during periods of rising rates. It has done that before, back into the 1970s, for example. But basically, strong or rising rates creates a strong US dollar, and that's always a little bit of a headwind for gold. Now, one of the things you said there before that's quite interesting is we talk about the turmoil going on in the markets with the Russia-Ukraine invasion. Gold rallied extremely well on uncertainty, and gold has done this several times. So you look at the annexation of Crimea, gold rallied, 14 days on rumours, but it fell pretty heavily once it happened. It fell back not just to where it started, but it fell even below that again. You look back to where the Gulf War was in the 1990s, same thing. So gold tends to reach these, not extraordinary highs, but it has a very strong rally on the threat of uncertainty. But once something happens and the markets have the chance to digest the news. Now, I'm not saying this is good news. It's still pretty catastrophic what's going on, but it's not world ending. So we've been able to, the gold price has come down. It's sort of softened as the news flow starts to come through. So there are two factors keeping a lid on gold at the moment. From an internal machinations of the gold market, because I've got some friends in the industry, it's managed money and open interest. So the future side of the business of gold is really moving out. So for 3 consecutive weeks in a row, they've been reducing their positions and moving to cash. However, what has strengthened on this side of the market are ETF inflows. So I think about 5 million ounces of gold have been, it's moved from 101 million ounces under management in gold-backed ETFs to 105 or 106 million ounces of gold under management by ETFs in the sort of that same 3 to 4 week period. So what we're seeing here is that big money pulling out of the market and moving to cash, and we're seeing more of think of it like slow money moving into gold for now. So that's quite an elevated level to see people moving into in ETFs. It's a good sign, but managed money is pulling back. Why? I don't really have an answer on that yet, but the flight to cash tells me that they could be just de-risking, or it was merely just a profit-taking exercise. They've got in at a great price, they've got out at a great price, and now they're just sitting back on the sidelines and waiting for some decisive action from gold. So I've just got a chart behind me with gold sitting at around about 1920 in US dollars. Look, it's great support, but it's banding sideways a bit. So there's no real jerk up or down. And I think that's what managed money is sitting on the outside for at the moment.
It's interesting because, so two things sort of struck me when you were talking there. It sounds like the correct way to play gold in these sorts of markets is the old buy the rumor, sell the news. It seems to be what's happening, which I find really, really quite strange with something like that as an investment. And the other thing that strikes me is that you talk about sort of the managed money, and then you talk about the ETF flows, and they kind of seem to be moving in different directions. And it sounds like, as we know, ETF flows quite possibly could be some of the retail investor, the slow moving, sort of is more reactionary than proactive when it comes to investing in not just gold, but a lot of getting ahead of a lot of themes and trends before they actually move. So it's interesting. I actually was talking with somebody recently, and I'm actually interested in your thoughts on this as well. There are some new ETFs hitting the market. I think there's one that hit the market just in the last week or so around recycled gold, and I think we might have touched on this the other day as well. But I mean, is that when investors are looking to get into gold? I mean, is it the kind of market that can be really taken advantage of with short term trades, or is it one of those things where, so me, I'm a bit of a long term investor. I'm not a big trader because I kind of suck at it, right?
Me too.
but when
I
it comes to gold, in my mind, again, it feels like it's one of those parts of the portfolio which is something that should be taken into that long-term account. And we talk about some of these short-term moves because they are relevant and they quite possibly present buying opportunities for investors, or if they move high, there can be ways where you can take profits out the market as well. But ultimately, my view is that it should be a sort of portion of a long-term portfolio. I mean, does this short-term stuff really make a difference to the longer-term thread that you think that this market's going to take, or is this kind of like, is it going to be a sideways market for sort of like 18 months or so?
Look, no, I don't think we're going to see a sideways market in gold for 18 months. Look, I wouldn't rule out it being sideways until June or July. There's that old saying, sell in May and, go away. But, that's still a few months out. Given the shock that we've seen in the market, without another sort of significant newsworthy event, I don't think we're going to see gold really take a solid run up above 2,000 per ounce. Again, I'm talking about US dollars. There's multiple currencies going on for us at the moment. Look, I absolutely agree with you that from a long-term point of view, the short-term price movements in gold shouldn't matter. And this has been my bugbear for, how long have you known me? For about 10 years.
A long time.
If gold is in the news, that is not the time to buy it. I cannot emphasize this enough. And this is because the mainstream press just don't cover gold properly. In Australia, they tend to cover it if our gold miners produce record amounts of gold that year, or if gold's in the news because it's hit an all-time high. That's the worst time you could be buying gold for a couple of reasons. Chances are you're in line behind 1,000 other people for their physical bars, but odds are you're buying at the absolute high and it's going to fall. The best time to buy is when gold has taken a good fall, because every time gold goes up in a straight line, it comes back down in a straight line. So I think like the East. The East buy gold as an alternative form of currency, and they don't buy when gold is in the news. Like aside from around, Lunar New Year, for example, that's a massive gold buying festival and the price really isn't important. Otherwise, when that price is forming like a sideways trend, that can be a way of drawing, that you'll see, Asian countries consuming more gold. That's really when you want to be buying. You do not want to be buying when gold is, hitting new highs.
I'm sort of slightly chuckling at that idea when you talk about it, because it is incredibly reminiscent of how Bitcoin works and how the market works. Is that like the worst time to buy usually is when it is just everywhere.
Yep.
The same with all parts of the crypto market, where it's like NFTs is just like the most screaming recent example. It's like when it is literally plastered everywhere, and when your cab driver's telling you about them, and when your gym instructor's telling you about them, it's just like, oh, this is like the worst time to be doing it. That doesn't stop us from doing it. I mean, I'm just as guilty as anyone else of buying the top, but also buying the dip, and
Yep.
that's when you've got that long term time frame. Bitcoin, like gold in that sense, is when people are terrified. I don't know if gold's got a similar thing, but with crypto and with Bitcoin, there's like this sort of sentiment candle that moves from like extreme fear to extreme greed. And it's actually a pretty good little sentiment swing about sort of looking at when is a good time to add to your positions or, top up your holdings. Is that when it's an extreme fear, usually in a massive dip, like the price is ripped off like 30-40% or something from an all-time high, and everyone's like just terrified that it's going to go to zero when we know that that's just not going to be the case. But that's when the smart money starts to move. Like I remember when Bitcoin topped, I think it was November at like almost 70 grand, like just under 70,000 US. And then it's like ripped back to like close to 30. I think in some exchanges it was even under 30 grand, right? And it was just like, and this is what we write to our subscribers and readers about. It's like, that's not the moment to capitulate and fall to pieces. That's the time when you just take a step back and go, right, what's really happening fundamentally in this market now, as opposed to the bigger picture. And it's most of the time it's kind of that whole buy the dip, right?
Yep.
or in crypto, the abbreviation is BTFD, but I won't expand on what the F means. I'm sure everyone can figure that out for themselves. But it's a similar thing. And look, I know. Interestingly, and I'm sure you've come across this loads, is that there's this kind of adversarial relationship between gold investors and Bitcoin investors,
Oh yeah.
as though the two can't exist in a portfolio side by side. Now, my view on it is pretty clear, and I've said this for a long time. So I've got nothing against gold. Most people have some sort of exposure to gold. It's not a bad idea to have a portion of your portfolio in it for a number of hedging reasons. And anyway, but the same for Bitcoin, right? It should form, in my view, a part of a portfolio for for smart investors. I mean, what's your take on it all?
First of all, I'm going to challenge you on that. Most people don't actually have exposure to gold. There was a study in Australia done a couple of years ago that they estimated that about 2%, or this is probably even before Bitcoin started hitting those insane highs, but about 2 to 3% of Australians owned Bitcoin, whereas less than 1% owned gold.
Really?
So it's a gold ownership in Australia in particular is quite low. It's a lot higher in the US. Now we're talking physical gold. I think you could, if you included things like gold-backed ETFs, you could probably see that number grow a little bit.
Yeah.
Now, obviously, the other thing too is you've got to remember is I think crypto is drawing in more young people to invest in it than more young people are going to gold, and it's simply because it's such a poorly understood part of the market. Whereas there's a lot more chatter around crypto, and quite frankly, it's thrilling. I once had $500 worth of crypto, and I've now got about $140 worth of crypto. I mean, it's just been a wild ride. Clearly not following your advice. So I don't actually think there's a lot of gold ownership out there. But again, I do think just from that, buy the news, what is it? Buy the rumor, sell on the news.
Yeah.
With gold, look at it as like a currency play. And I don't know if this works for crypto, but when the Aussie dollar is really strong and the spot price of gold is falling, that's actually the time to buy gold, because then you're basically going to get more ounces for your money. So I assume it would be the same for the pound sterling as well. And now I don't know, is there any sort of correlation that you've noticed in crypto that when, currencies are weak, moving into crypto is a good thing? Or is that some sort of neat currency play that you can happen there?
Most of the time you find that there's sort of like a pretty common theme that the crypto prices and Bitcoin tend to follow the NASDAQ more than they follow currency movements. Although to be fair, recently there's kind of been a decoupling from that in terms of the Bitcoin's price in particular has really sort of turned against the direction that the NASDAQ's gone. And my view on it is pretty simple, is that there's no point trying to correlate Bitcoin to currency markets or the stock market or even gold for that matter. And, it's interesting you talk about the ownership of gold. When you think about how massive the global market for gold is, whether it be for use, use in jewelry and that industry, or whether it be physically holding, in ETFs or vaults or however people want to hold it. Gold miners, the whole industry is gigantic. It's much bigger than the crypto markets. But yet now we're sort of talking about a divergence in who actually owns and holds it. I think I don't know, it's just something to think about and unpick maybe a bit further on down the track. But I find that interesting. I mean, I do know that the adoption rates of crypto are escalating quickly. They're sort of on track with early stages of the internet. And I think that's only going to accelerate as well. But interestingly, I think that there's still a underserved part of that market where there are, you can get access to cryptocurrencies that are fundamentally backed by a physical asset such as gold. And I know there are a number of players out there that do that sort of thing. So I do see in the future these two worlds sort of converging and combining in a bit more of a friendly fashion than, I'm a gold investor, Bitcoin is not backed by anything, so it must be garbage, and vice versa. It's like, I'm a Bitcoin investor and gold is rubbish because all the old people invest in gold. And it's like just this stupid, really adversarial kind of tribal instinct that kicks in. In the back of my mind, I've just planned that song, why can't we be friends? Why can't? But, the reality is that just doesn't happen.
Yeah, look, I don't understand. Look, I don't know a lot about crypto. I'm the first person to admit that. I've chosen what I'm good at, and I'm sticking with it. In saying that, I see roles for both of them in society, and I don't understand why there is this own gold because it's tangible, it's worth something. Well, yes, it's true, but it's only worth something if somebody else decides it has value. Now, gold has always been highly sought over, so it does have that long history. But I think anybody who is pro gold and anti crypto, I was about to say crypto then, my apologies. I don't turn that into a soundbite. I could just see that turning into some really dodgy meme.
That's gonna go viral on social media.
Yeah, I'll put it in the Wall Street silver threads. I think it's ignorant to be anti-crypto. Like, crypto is very much part of that next transition of money. The problem is we just don't have the right language to know what to call it yet and to see where it fits into what we're doing.
Yeah, it's interesting you talk about language there as well. And this is something I've written about and spoken with a few people about recently, not just in crypto. It's like when you get into the crypto markets and learn about crypto, it's like learning an entire new language. It's like if you've only ever spoken English and you go and try and learn Spanish, it's like, I don't know what the hell's going on. Or you're going to learn Japanese and all of a sudden you're reading books from the back and you're like, hang on, what? And you know what? It's the same for every investment or every asset class, even the stock market, right? A lot of people look at the stock market and just go, what the hell is going on? We've just talked about ETFs. I guarantee you there will be people who are like, what the hell is an ETF?
Yeah.
And for anyone watching that doesn't know, it's an exchange traded fund. So it's like a managed fund, but you can trade it like you do a stock on the market. Very easy, quite a lot of liquidity, as opposed to traditional managed funds. But we can unpick what ETFs are, and that might be something we'll cover in future podcasts. Is what is an ETF? What kinds of ETFs are out there, and how can you invest in them? Because they are handy little tools. But again, something for another day. But like I say, completely new languages for a lot of people. So we must remember to always do our best to explain. And if anyone watching has any questions about some of the terminology we use or what we're talking about, write in, ask us. We'd love to hear from you because we don't know what you don't know. And we do our best to try and educate you and let you know about these things so that you can learn these languages because you don't have to necessarily be able to speak, Japanese and Spanish and German and English to be multilingual. But if you're investing in the stock market or in crypto or in commodities, there's a whole new language that you can learn and grow your knowledge base from there as well. But anyway, we've gone on long enough. We usually try and keep these to about 15 minutes. We've got 17, 18 minutes. So thanks again for joining us this week, Shae. It's been a pleasure as always. We'll be back again with you soon with another Exponential Investor Podcast. Thank you so much for watching and listening, and we'll see you again soon. Bye for now.